and welcome to today's broad weekend video, which is called S&P 500. What are the rally prospects and how the situation is shaping up across various asset classes, sectors, and so on and so on. Starting as almost always with the US dollar, you see how the run-up post-elections, expectations of pro-business policies transitioning into the tariffs, Liberation Day, country deals, pause, and now the pause is almost expiring, and you can see where the US dollar is right now and how my cause for it to be declining and breaking below the key 100 to 101 area. See how well this one held at the retest early in May, the rejection following consecutive rejections and clear break below 100. What does it mean for risk-taking and real assets as such? Yields. Is the long end more sought after, or investors are not willing to go for long durations and prefer short end of the curve? What does it mean when the treasury is rolling over its debt still into low duration instruments? What about the job market status? How is unemployment rate looking? Continuing claims. They are rising while initial claims are more or less stable in a sleepy range, just as they had been last couple of years. Jobs openings, they are increasing. However, what is the participation rate doing? What about hourly earnings, income in general, and willingness to spend by the consumer? How does it tie in with recession fear-mongering? Is it close? Is it not? I do not think that we are on the verge of recession hitting anytime soon. Stock market. Has it been bucking the non-farm payrolls data that were sent up to the stratosphere through government hirings? Which sectors are those that are leading? For weeks I had been talking the importance of tech, financials, industrials. See how well materials are doing, and as well trading signals clients know that energy had been turning up, and same goes for my prediction of oil having found in the post-Mideast ceasefire jubilation they had found the bottom and they had moved up. Of course, on Friday we had seen quite a counter-trend move, quite a retracement in risk-taking, be it in stocks, be it in oil. However, which had been, out of those real assets, the one that had held up relatively best during Friday, and not just Friday. Trading signals clients know which had been my pick for best appreciation within commodities, precious metals. So, should we fear crowding out effect once the spending and debt reissuance debt rollovers, once we have the big beautiful bill in, triple hooray please, now that we have this one in and the debt ceiling raised by 5 trillion, what does it mean for debt issuance as such? Is there waning preference for junk corporate bonds? Are they weakening? Not really. This is another instrument worth watching at this moment, and of course the 90-day tariff pause that I predicted for clients with great fanfare to be announced early in April had been and is close to expiring, and how many country deals do we have? What is going to be closed at the last minute? What would be anyway those catalysts that could send stock market meaningfully lower? Mideast tensions flaring up again. That is probably the most valid one, and you know how likely it is at the very moment. So here we go with the daily chart of S&P 500 and notable improvement in market breadth. Is it getting too frothy or not yet? No matter us moving almost in a 45-degree angle. What is retail doing? What are institutions doing? Very clear answers, very valid questions, answers to which I'm giving and adjusting market outlooks communicated to clients every single day and intraday to 5-day perspective of sectoral performance of S&P 500. It might be a bit deceiving that tech is only on par with S&P 500, but is it an issue or is it a sign of rally broadening out? How healthy is that? Financials, they are doing well enough or not really? You get the point. Financials are doing great. You see here materials and as well how energy had been turning the corner in the last couple of days. Gold and silver. The black overlay line tells you everything you need to know about how miners are doing, what silver is doing, and how these perform when gold itself goes for a very tight daily setback. And I had been clear that gold would not be automatically catching a beat based on what the US dollar is doing, meaning gold would not be rising by at least as much as the dollar is or had been depreciating. So much for that, and my join page will help you select what's right for you based on what and how you trade. This is but a mere preview of the correct questions and answers to which are being given to clients. Have a great weekend.